I found out it was vacant when my neighbor called me and said there's a waterfall coming out of the side of your house.
Okay.
Okay, so there was significant damage. Hello, Kevin Amos, Pine Financial. We work together so you succeed. If you're just watching this video for the very first time, or if you've been watching it for a little while, hit subscribe. We'd love to have you on part of the channel. Leave some comments. We have fresh new content coming out each and every week. I got a really special guest with me today, John Booth from Associated Agents. Actually, you're just right down the street from our office, aren't you? It's
We
like
are.
10 minutes away, but we didn't know that when we first started working together. We've been working together for about 10 years. When I have any question about insurance or protecting myself or my clients, I pick up the phone and call John. And John was gracious enough to come in and have basically a quick conversation, just like if I was picking up the phone to ask some questions.
I appreciate you having me, Kevin.
Thanks for being here. So we'll just dive right into it, and we'll make sure we get all your contact information near the end of the video.
Okay.
So if I'm gonna fix and flip a property, John, I know I can't get a landlord policy because there's a vacancy clause. So we needed other types of insurance. And I think there's some insurance with liability coverage and some without. What's the distinction between those?
Absolutely. And the fix and flip market is a little bit tougher than the standard landlord policy. So you have to be careful on the perils that you're purchasing, which sometimes can get whittled down to maybe perhaps not cover a water damage claim. I think we've seen claims where a line to the refrigerator somehow sprouts a leak and damages a hardwood floor. In the fix and flip process, you don't want water damage excluded. So there's certain aspects of that policy that need to be looked at pretty carefully.
Oh, that's a good one. I've actually had that exact. I've had a couple of other
And
issues.
was it covered?
No, it wasn't.
Yes,
It was not
that's
covered.
where the investor has to be careful on these.
And this is where I was a newer investor and I was doing a lease option. So I was just leasing the property from the owner and I got added to their policy as an additional insured.
Okay.
I didn't even read their policy, so I had no idea what was covered, and that wasn't one of them. I've actually had two other instances. One was covered and one was not for water. I want to talk through this real
Absolutely.
quick. I had a property out in Broomfield, Colorado. It's a northern suburb. It gets somewhat cold in the winter, and my house went vacant. I had a tenant living there, John, and it went vacant, and she turned the thermostat down before she left.
Absolutely.
I found out it was vacant when my neighbor called me and said there's a waterfall coming out of the side of your house.
Okay.
Okay, so there was significant damage in this property. It was right above the kitchen where the bathroom was that broke.
Okay.
That insurance was covered, so I was able to get loss of rents and everything.
Absolutely.
The other one was I had a borrower on a loan I made to him turn the thermostat down or not up, and we had a flood at that one, and we weren't covered. So
Okay.
this is what you're talking about, the perils and making sure you're covered for the correct.
Absolutely. And again, you need to be able to trust your insurance agent to find the right type of policy for you. But and to get a little bit into the details, there's a basic, broad, and special coverage form. And when you're describing the covered claims, you're referring to a special cause of loss form. If it's on a basic form, it's just the very named perils that they put in the policy. And that's what investors really need to be looking out for. And I know you guys are very busy. They're not there reading the insurance
No, we
policies.
can't. No one reads that stuff, John.
Right.
So the reason for the denial on that one, this was in Colorado Springs,
Okay.
they said, and actually you and I had a conversation about this one. The reason for the denial, they said, was neglect by the owner because they didn't keep the furnace going.
Absolutely.
What are some other reasons that claims get denied?
Well, there is a whole host of reasons where claims can get denied, but surface water would be a common one in Colorado because we don't think we're subject to flood, and flood is an excluded peril in most policies. And we tend to get these gully washer type storms, so where the basement floods through the basement windows. Those type of claims typically not covered, but we're now starting to see carriers address this, and they can add a kind of flood extension policy to a standard homeowners or rental policy. But that's fairly new in the Colorado insurance marketplace, but it's worth thinking about because we tend to get
For sure.
we
And
get
it's probably
extreme.
not that expensive.
It
right?
isn't. It's a $100 extension or so. But we get extreme weather conditions here in Colorado. It'll be dry for 2 years and then we'll get ridiculous storms.
Some of the other things that I've got tripped up on in this business with insurance would be, one of them would be cash value policy versus a replacement cost policy. I know there's a pretty big difference there. Can we walk through that?
Absolutely, and that's something that the consumer should be watching for, because more carriers are going to this actual cash value approach. Maybe not for the entire house, but maybe it's for the roof that is limited to the actual cash value. They don't want to be buying a new roof for the hailstorms that are occurring so readily here in Colorado. So they'll put an endorsement on there that says we'll replace it at an actual cash value basis, which means if you had a 15-year-old roof, they're giving you the value for that 15-year-old roof, which may be 20% of the cost to replace it. So you need to look very carefully at looking for replacement costs, not the actual cash value policies.
Yeah, so you went pretty fast there, so the viewer knows a replacement or a cash value policy is going to take what they believe the value of whatever's being replaced is and just give you that. So John's example was a roof that's 15 years old. So they're going to take the roof brand new price and depreciate that over 15 years. And that's the value, which is nowhere near enough to replace that roof.
Absolutely. And you just think of the normal lifetime of whatever the property is being valued at, and then depreciate it based on how much of that lifetime is gone. So in our example, if it was a 20-year roof and a 15-year occurrence, then 3/4 of that value would be gone at that point. So they'd only pay you 25% of the loss.
So this is why you want a good agent on your team so that they know what policy is going to be the best fit for you. This replacement cost versus cash value has burned our clients in the past. So I would highly recommend that you go with the replacement cost, but even more than that, to work with John or someone like that that understands the fix and flip business. A couple more before we wrap up here.
Absolutely.
What if my contractor falls off his ladder and breaks his leg or his arm or something? Am I covered?
You know, anything that happens on your premises potentially can come back to you. Now, since you've invited him on to do work for you, the normal process.
He was trespassing.
No, he wasn't. he was hired by you
That's
to
Travis's
to
line,
do the
right?
roof. And so he should provide you some proof of insurance. So the more typical approach would be to get, well, one, if he does damage, or maybe he drops the ladder on the neighbor's house, you don't want to be held responsible for that. So get proof of liability insurance and make sure he's covered under some type of workers' comp policy so his injury doesn't come back to you.
Good advice. Last one. I'm pretty cheap.
Okay.
I like money in my pocket, not in your pocket.
Okay.
So when I buy a policy, let's say a year policy, and I'm doing a fix and flip, I'm not going to have that fix and flip for a year. Can I get some of my premium back if I'm not using the whole thing?
Absolutely. We work with carriers that only charge you for the exact amount of days you own that property, not 3 months or 6 months in fixed increments. So from the time you close on that property when it's vacant, when it's been being renovated, and then also when it's vacant and held for sale, that time period is what you pay for. So even though the policy may be an expensive policy, hopefully you only own it, and especially in Colorado with the turnover, 3 or 4 months, and you only pay for
And
that
that's,
time.
we call that not a fully earned, that's the
Pro-
wrong one.
It's pro rata.
Pro rata, like a
cancellation.
refundable. If the viewer came to their agent and they said, I want a refundable policy,
And stay away
that would
from
be pretty clear.
and stay away from the fully earned premiums.
Stay away from fully earned premiums. So I hope you got some value in this video today. John, why don't you share contact information and we'll wrap this up.
Sure. Again, my name is John Booth, the owner of Associated Agents in Lakewood, Colorado. You could find us by Googling Associated Agents Insurance, or my contact information at the bottom of the screen.
And us, Hard Money Lender, we'd love to finance your purchase, your repairs, your closing costs, everything. 100% of your deal up to 70% of the after repair value. I know I went really fast. Get more information at pinefinancialgroup.com.